Can you hear me now? Hopefully you guys can hear me now. Give me a thumbs up if you guys can hear me. Let me check this is through my headset. Can you guys hear me now? Can you guys hear me now? Just give me a thumbs up if you can hear this. Every time I go on the road, I have some sort of technical glitch going on here. Anyone in there? No? Yeah, sounds good. Okay, thank you very much. Thank you very much. That's you're into somebody new. Appreciate it. Thank you. Welcome to the show. I hope you guys are having a good week. It's an on-farm payroll week, so keep your leverage low and your stop loss tight. These news events, this news event this morning, quite choppy, so be careful. I'm going to mark off the usual suspects this morning. Holy smokes, can you guys hear that? Oh, hopefully that's not, you guys aren't hearing too much of that in the background. If you are and it's too noisy, let me know and I'll just pop this on when you guys can hear me. Okay, so right here you see how these two last down close candles, I don't want to see those broken to the downside. That's why my stop loss is sitting here. I want to see this continue marching higher through this 4-hour fair value gap inversion here, and then continue to use that to go higher. So I will use this as my support level. I don't want to see it come back through that. If it does, then I'm thinking we're coming back into this range deeper, and I don't want to do that. I'm at my wife's father's place, and he's got a dishwasher that sounds like it's chewing the dishes up, not actually cleaning them. So I can hear it right through my headset here. You guys just let me know if it's too noisy. Wait, it sounds like the house is being eaten up by this dishwasher here. So yeah, anyway, so that's a first objective there. So I'll take one off at the top of the 4-hour, and then I'll leave the rest to run. That should put me around $4,000. So you get to 1,000 in the bank, and then let the rest run. Now, I do see a 4-hour right here. What did I have marked off there? There to there. Let me revamp my numbers for you. We have this is the 4-hour chart. So these are my modified upside objectives. Don't know what I had marked off there, but So these are the next upside objectives. I'll pay myself one here, one here. If I can get to that, I'll take another one there and let the rest. I'm guaranteed 1,000. And I can get to here, it would be another one. Craig, good morning, Craig. Vittorio, good morning from Singapore. Good morning. How's things over there in Singapore today? Is that your wife right there? A couple of Seth. What is that? Seth. Theo? Sorry if I pronounced that incorrectly, but may I ask what the entry setup was? Yeah. Okay, so typically this was the entry where you're looking for down here for a retest of the BISI. Once you break that premium level, this is just my way of looking at box-to-box trading and then extensions. Russell has asked me yesterday about how you determine a range extension. A range extension is typically when the premium box is taken out with an up-close candle and you trade back into it, you can go long. But because this is during that lunch hour, you don't really want to, or sorry, not lunch hour, news event. You want to wait till after the news event. It ran all the way up here, turned, came all the way back down, tag that for an entry here, and then I was talking on the other channel about I'd like to see it go higher here, and I'm using the Tibbs 42 as a turn candle, or a bottom out candle. So 42 is the turn. We want to see it get back through this little premium right here. It gets back through the premium on a close, comes back, taps it, and I think I want to see the high get taken with a close. It closes up here, comes back, just taps it, go long there, and that's your range continuation. As soon as the high is taken with a body close, the body closes above it. The next candle that comes back and taps it, you take that for a long. Stop loss would go just below that low, one tick below the low. The mean threshold is the line in the sand. And after having already revisited this, you expect that to go higher. You have higher time frame objectives still. ES and all that's taken out their highs already. So they're going to drag price higher, and NQ is going to follow suit, hopefully. And that's why I'm taking this high and looking for the continuation. That's my rationale for that anyway. Does that make sense, Vittorio? And if that's not your wife, Fathiel, welcome. And if it is your wife, welcome anyway. Welcome to the show. Can you guys hear that thing in the background? You're welcome. Excellent. Yes. Yes, is that your wife? Or yes, you understand what was I was saying? Either one. You're welcome. So just looking for this first one here. I'll take a partial there. Now you're looking here for any, so I look at this range that I'm in right now, and I think 50%, because you're already $4,000 in. So if that just came back against you, and you say, wow, you just lost $3,000 of that profit. So here's where your psychology starts to come in. Do you want to lose any potential gains you've made? And we're right close to the top of that 4 hour. So you go back and double check that your levels are accurate. So I look at this candle right here and I say, what's the low of that? That's 902.25. And we're sitting at 898.8. So 902.25. Be right, 902.25. That's down 3. So now I look at this and I go, how far into here can we come? There's a little tiny fair value gap sitting right here. That would probably put us around 50% or so. It does. So this order block has to hold. This is when you start looking at this and you start going, oh no, I'm giving up all my profits. It's not your profits until you lock it in. That's the profit. This is just numbers. Till you lock it in or you hit the cancel button and pay yourself, there's no profits there. That's the only profit you have. So I'm looking for 50% of this range here. Kim is using her own laptop to monitor charts. Oh, hello, Kim. Kim, welcome to the show. Is this Kim's first time here? Good morning, Hadi and Shepard. How are you feeling today, Shepard? Are you teaching her the ICT way, Vittorio? Doing a bit better, thanks. Oh, that's good to hear. It's good to hear. And how's everything with you, Hadi? Sometimes being a financial analyst has problems trading, no job creation. No job creation is not bullish. Pretty good. Glad to hear it. Hadi, glad to hear, my friend. Anytime, my friend. Anytime. I'm looking forward to seeing you next month. Oh, it's been a good day here today. Yesterday we had turkey dinner yesterday, which was kind of great. We went to one of Carla's relatives, and they put on a big turkey feast for us. It's like, wow, this is quite the treat in September. It's like early Thanksgiving or something. So yeah, it's nice to have a visit. I'll be seeing my family in a few days and visiting up with our friends in Africa. As usual, we're showing all the pictures. So you spend like 2 hours showing people pictures. Do you think I've showed this thing so many times? I'm bored with it, but everybody else, it's like a new thing, right? So you see how we've got this balance, this immediate rebalance here. So I'm still looking for 50% of that range, which is that little fair value gap you see right here, this busy. And I want to see if that holds. And that's all I want to see. It's just a little tap down here and then continue going higher. Russell, my friend, how is things? Because the next potential is this thing right here. Okay, so we'll take the larger of the two. That would be 50% right there. The smaller of the two would put us down a little lower, or it puts us right on 50% right there. So I want to see that tap there, take out this candle's high, and use it as support to continue going higher. Because if we start to dig into that SIBI, so we've got or BISI there, see how we just tapped it? Now I want to see that start to move away from there. If we start to dig down deeper, then you're looking at this larger range, and 50% puts us right there. That'll take out my stop for sure, because then this does not provide support to go higher. So I'm just looking initially for that 50% to get tapped and go higher, or this order block to hold price. I'm trying to hold my trades a little longer and trust these higher time frame objectives. It's about how much of this are you willing to give up to do that, because you can have these crazy, and it's non-farm payroll week, obviously, so you got the potential for these to do some quick turnarounds on you. So if you want to lock in some profit, lock it in. As soon as I get that first one there, then I'll pay myself there. So you see how close you were to getting the first take profit partial. High school football tonight. Both kids are playing. Oh, excellent. What positions do your kids play, Russell? Fun football times. I pulled the change during my son's football days in high school. I pulled the chains. I used to be a quarterback when I played football. And then I realized, you imagine you got this British kid that comes over, and I could throw a football, man. I was really accurate. I could catch a guy on the run and everything. I had some really good accuracy. And I didn't know anything about Canadian football. So I was playing, and we had to do this thing called, it was a T48 pitch on 4. Ready? So I ended up, the coach would come over, he goes, you got to get rid of that ball faster. I'm like, why? And he says, because you're going to get hit. I'm like, by who? And he says, those guys. I go, what? Well, what are these guys for? And I was pointing at the defense, and they go, they're defense. I'm like, well, if they don't do their job, can you fire them? And he's like, no, they can hit you sometimes. I'm like, I'm not playing this game. I'm like sticks. I'm like a stick. Look at the size of those guys. So I quit football. That was it. I was like, I'm not playing this game. Those guys are going to crunch me. I was just a little handrail back then. My introduction to Canadian football. Not like soccer. Can't we just kick it back and forth? Why is it so oddly shaped? No, you got to throw it. All right. What is the chains? Pulling the chains. Oh, the first down chance. Oh, you get to be on the sideline pulling the sticks. Okay, or the chains. Oh, that's right, because it's on a little chain there, isn't it? To make sure the yard line sticks. They're like, good Lord, this guy is so uninformed. One plays middle linebacker and tight end. So big boys. Left tackle. So do you think they got a chance to get into the big time? It's like hockey up here. All the kids want to play hockey and make it into the NHL. They all got the big dream. I'm going to move on to something else here while we're letting that thing play out. So if you look at your 4 hour, you see how it's already taken out the new high in ES and continuing to go higher. Dow Jones, just shy of taking out this new high. Let's have a look at the daily, make sure we've got this new high here. So 45,840. And remember, the seasonal tendency is September makes a typical run up from August low into a new high in September, and then a run down into October. So we should see a new high as a seasonal tendency typically goes. And I'm not going to spend too much time on all these. Change in direction, small little change in direction here. You come back and you just tap it there. That would have been the perfect entry point at 109,746. Take the breaker to the upside, use the breaker to go higher. It actually takes through the mean threshold, so you're looking for a deeper run in here. This BISI holds price, you run back up, and then you re-engage this breaker on the other side here. Retap once you trade above it, again, come look for it to come back. You re-hit it, take it higher, immediate rebalance. This is where you gotta, Kim, if you're watching this is where you gotta kind of watch for these immediate rebalance levels as well. They're not just, this is where typical day traders miss out on the opportunity to see these things. When you see an immediate rebalance back to an old wick like this, you treat it like it doesn't exist. I know it sounds weird, but you treat it like it's a fair value gap, like it's a BISI only. So when it trades through it and comes back into it, you use that as a long entry. So you can use what we did on this last, on NQ, when it came back and tapped the high. You can use entry 1, entry 2 is half the wick, 3 is here, 4 is the no-go line. But when that's sitting inside this BISI as well, you have to use the whole thing and put your stop loss just below that low there. Comes back inside it and goes higher. I know it sounds all hindsight and stuff, but it's the same thing we teach every day. So it doesn't matter what asset class you're on. And I'm waiting for Nazir to come in here today. I've been looking at his Nifty, and I was like arguing with him yesterday about his markets just the same as ours, and he's like, it's not. We don't trade as many hours, and it's true, they don't trade as many hours, but the algorithm still reaches for the same PD arrays, whether it's in today's 5 hours or tomorrow's 5 hours or whatever. It still runs to the same place. So I wanted to make that clear to him. So hopefully he pops in today and I get to chat with him, because it's important that he realizes that. Otherwise, he's just going to think we're just some crazy North American guy that doesn't understand the Indian market. Crude. Look at that, lewd crude. Rude crude. All right, so here's another example of that continuation, a range extension. So you guys need to see this for to understand range extension and continuation or reversal. So you take your, we do this. You're inside this range, right? You trade it back up into a premium portion or a breaker. You hit the breaker perfectly right there. And then we continue to go down lower. So you think, okay, now if I see it break this level here, I'm inside this range. So in order to see this small little range here stay bullish, I need to come back into this, find some support and push higher, get through the mean threshold of that candle and push higher. If it doesn't, and you see it break through it, then you say, I want to see it immediately come back to this candle and tap it so I can catch a 50% or more of this internal range liquidity hunt, and I'm aiming for my discount box right here, right? Now you see price runs straight down, doesn't give you an opportunity to come back above or in the premium here to run for a discount. It actually closes. Look at that close. See, it closes right below it, and then it trades right back up inside it. Now I'm looking for, because the low has not been taken yet, I'm looking for a range extension. I'm looking for this range to continue going lower. It closes below it, comes all the way back up. Wick kind of scares you off a little bit, but the bodies stay inside that SIBI. Now you're looking for a descent down, takes out the low. It did right here. And then once it does this, you're looking for one of two things. One, it's just a retest of the old low, so you could have got in there. The halfway through the wick, you can get in there. This candle's low, and this fair value gap again, touching it from the bottom half, like the bottom side of it. So there's the retouch right there. So you could have got 1, 2, 3 levels, and the key thing here is now that you've seen this low get taken and you see this fair value gap forming, you go, I do not want to see it close above this level. So all it can do is wick up here and tap this, but I do not want to see it close above here. If it closes above here, then I have to wait for a market structure shift. I have to wait for it to break through the mean threshold of this candle and get on top of this SIBI one more time to run back up into that premium level. It doesn't, it just simply does exactly what you want it to do, hits it, a nice snap off of it, and continues to go lower. And that's where you catch that beautiful little run in oil today. On a 5-minute chart, there was your perfect entry, along with these couple of entries down here if you went off of there. Again, this is, like I was explaining to Russell yesterday, this is dealer's choice, right? This is the trader's choice. You decide whether you want the low, half the wick, this last down close candle, and or that fair value gap. That's your choice. You may be layering in your response and putting your stop loss just above this order block and letting it run. You have to trust that. You have to see it. And if it goes back through you, then fine, get back in sync with the market and it'll go higher. I caught this small little trade here this morning. From here, we popped through that discount level, came back in. I got it right on the top there and got right out at the bottom right there inside the SIBI. And that was my little oil trade this morning. Had I left it, look where it would have gone. But I wasn't watching it. So anyway.
Did I wake you up?
And he's hard of hearing, so he's yelling in the phone. Sorry, I'm going to catch up to some of you guys here. The others play left tackle. Both are very committed with my older one, excellent, acting as a mentor of my younger one. Excellent. I'm doing a long in crude oil. Ooh, you're long in crude. You're going long. That's because you buy it at that, when it hits like a certain level, right? If it gets above here, Craig, I'm all with you, man. If you can stay above that level on the close, there, that's a good tap right there. That's a nice long right there. See how it closed above it and then tapped it? Now it's going lower. Look at that. Now I'd be like break even right there and just let it run now. Good for you, Craig. Let her buck, buddy. That's a good run. Let her buck. Go to break even and let her buck. Now you want to see this one. This is your next bull trap. You need to see that let go. If that doesn't let go and this reverses on you and takes this mean threshold out here, you're looking for a revisit back into this level here. Otherwise, I want to see that just keep pumping through here and then start working your way back up to 62, 62, 67 or 62, 62. That would be my upside objectives to reach for oil. So good for you, Craig. You caught yourself a good one, I think. Yes, love crude oil. Yeah, my buddy's he used to be a big crude oil lover. What's Disney up to? Disney still has an upside objective. I gave you the watch here level, and it seems to be holding quite well. I want to see this gap hold price. They just walk up. They're just banging around inside here right now. You got to see it pop up above this order block here, which is this little breaker. Takes out this low and this low and this low. That one, I want to see that breaker get cleared on the top, find some support at it, and then start reaching for my premium box if I'm in Disney. Let's go oil. Let's go oil. Come on, Craig. Look at that. You're bringing in the beef now, man. You're slipping and sliding on oil. You're all over it. Let's go, Craig. Let's go, Craig. You got a zero stress trade going on there. That's a perfect entry right there. It's a zero stress trade. Nice. Good haul. And natural gas. You want natural gas to get way up here. So you just need to see natural gas take out these three candles right here on a close. Then you get a market structure shift. Better than this little guy here. We do have a small little shift here. We've come back, we've tapped it. I expect to see that keep marching higher and take out the next one and start running back up into this larger range here. When I started trading, I traded natural gas and crude using market profiling. I like the moves on them, although I wasn't very good. Yeah, it's exact same algorithmic setup. It all works exactly the same, no matter what asset class we're looking at here. Michael got me drinking the Kool-Aid when I realized that it literally, he's not kidding, man. It's literally everything that produces candles and runs on the markets is governed by the algorithm. And if you don't buy into that, you're going to struggle. Unless you're not struggling and you found yourself another method. It's great. That's why I don't understand fundamentals. I'm a true technical kind of guy. I don't understand the fundamentals, so how people can, because fundamentals never give you that kind of, I shouldn't say never because I don't understand it. From my understanding of fundamentals, they don't give you the precise, you need to buy at this point and you need to sell at this point. They tend to give you some long, lengthy, drawn-out explanation as to how the company's doing, and there's 100 companies in the NASDAQ, and you have to check on each one of them, see how they're doing. Then you can expect to see if there's buying and selling pressure, and that's just too much for my brain to handle. I like looking at ECGs and tell you where you're having a heart attack. I can tell you what blood vessel in your heart is being affected. I like to see patterns, and this is the financial pulse of the planet. So you can see these little patterns when they change up, and you can find some pretty amazing precision when it's available to you. This is the premium box. I'm pulling over here. See, I hit the premium box, and you're getting a reaction off of it. So if you want this to get back down into a discount area, I do like this. This is a CAM Model 1 right here. Get above this level here. See how the next candle on this side kind of, you got to look at your candles as they paint a picture on this side. So look to the opposite side of the valley when you start to go into a market maker buy model. Look at the opposite side, and you see this candle as support or resistance. So you want to see it come up, tap it, come back, find some support down in here. Then we want to see us eat through this mean threshold. See how you eat through it right there? Open, tap it one more time, start pushing higher. Then you want to see the high used. You take the high right there on a close. You come back and look at this. You tap the high. Perfect. They're data points, key data points inside candles. And if you don't understand the candles and you don't understand the data points, you won't understand this kind of level of precision. You just won't. Because you're too busy making trend lines and Hashiak and Dewey or whatever those things are called, and Bollinger Bands and MACD convergence, and just too confusing. That's just simply coffee, by the way. That's a commodity. Okay, here's a good example of, I'm going to do this with cotton, just so you can see the freaking mess that cotton is right now. How does anybody make sense of cotton when it's in a choppy market? Like, okay, now make sense of that, right? Where's the data points you speak of, Mr. Darren? Let's just kind of break it down while we're waiting for NASDAQ to do its thing. I do like this little piece right here. You got this all the way up to this gap here. Let's take this one where it's a little more cleaner. And then we look for the premium boxes up here. And this is just cotton. You got a low taken. You see this change in direction as soon as we get a body close above it. So it closes above it. And then you look for, do we get a body trade above this level? If it trades above this level, we're hunting for internal range liquidity as long as we're catching a discount below 50% of this whole range. So the first one is you want to see a body close above here, and it literally has not closed above there yet. Wicks don't count. And the body does. If it starts to take out that candle, you go with this candle. If it doesn't, you go for the SIBI. It comes back. No body gets above here yet, so you're waiting. There's the body gets above it. Look for this candle here now as support. There's the support level right there. You go higher, you're into the breaker already. Mean threshold, bounces off of that, runs back through, finally re-engages this discount area, then runs all the way back up to the premium area. So you go from discount box to premium box. What do we call that? Boxing, my box-to-box strategy, right? Box to box, then all of a sudden just guns it straight through on the downside, closes below this level. So what are we looking for? Range extension. You go into a 1 hour chart, you'll find some sort of reversal in here. As soon as it touches that level, you look for a range extension, or sorry, inside this candle. You'll see it close below here, come back, tap it, and then finally extend that range. You go down to a 1 hour chart, and you'll see it sitting over here. Hopefully you'll see it sitting over there. There we go. I think this was the big drop here, was it not? Yeah. So we drop below it, so you don't get to see it here. So you'll probably find it in a 15-minute or a 5-minute chart. Look in here. You guys can look that up on April 3rd. Look for April 3rd. Watch it retest this and then go lower. So that's what you're looking for. As you can see, we're zeroing in on it right here. We're pretty close. Pretty close. Then when it breaks through the opposite side, you want to see it start going higher after it takes that side out. Comes back inside this range. Greater than 50%. You look at optimum trade entry, then you can see the reversals happening in here. Look at that. Perfect reversal continuation on the downside. Takes out the discount area here. Box to box inside this range. Anyway, it's quite crazy. You can make sense of this. once you dig around inside here, you can see that April 3rd, and 4th is right here. So you look for that reversal in here, and you saw where we're starting to zero in up. So I'm sure you'll find it on the 15-minute or 5-minute chart. You'll see a catch here before it finally takes out that low. This one here breaks through that high. The premium box comes back, taps it. We've taken out the old high. Then you want to see it pass through it, come back into it, and run back down into the discount box again. There's a premium box, discount box. Stay inside the discount, then run back up to the premium, extend the range above here, trade back through it, into it, waffle around in here for a while, and you look at this gap in here. So it makes sense if you know what it is you're looking for in terms of gaps, fair value gaps, imbalances, so on and so forth. Anyway, I belabored the point. Oops. Banks, Ford, silver. Silver's still climbing good. Boy, when it finally broke out of there, it started on a nice little run higher, hey? How's little oil doing? Ooh. So, Craig, internal range liquidity hunt. You're above here, 62%. Do you pay yourself at 62? You break even, pay yourself above old highs, and I would have come back and got you out. So now you wait. You're inside this internal range now. So if you don't use take profit model 1, or you don't pay yourself at old highs, or if you just gun for up here, which is what we were looking for, that internal range liquidity, take profit model 1, I tell you, that's a great way to protect yourself against this kind of crap. When it turns against you, and if you're not paying yourself on the way up, then you're back to break even or underwater. Where did we get our entry? Right here, right? That was the perfect entry for long. 50% pay yourself, move to break even, 62%. Take profit model 1. This is a good example of a take profit model 1 saving your ass. Otherwise, this turn, you were expecting it to go up here. It didn't get there. You got to be staying on the horse, man, because when she changes direction on you, you got to be prepared for it. And you'll see it right here. Stretch it out. There's your imbalance. As soon as you trade below it, you think, okay, now I've taken out some highs. I've changed direction. Wicks come all the way back up inside. You've got a new imbalance right here. You trade below that one and this one again. You come back and retest that one right there and continue coming lower. And yes, you have to be able to watch that carefully, monitor it, like I haven't been doing with my NQ. What's my NQ up to? That came way back. It took me out. So it passed through this level. It cleared that level out, went way through the 50%, 62%, 70% optimum trade entry reversal. So we locked in 1,000. That was it. Now you got to wait for structure break. You got to break for this, or you got to break this here. So we can get above that again with a nice fair value gap and a retap of that level. I'll be in for that for long again. Don't worry about what you lost and all that. That's silly mind screwing. You're screwing with your own head if you start to worry about what you're losing instead of stick to your rules. Oh yeah, what are you guys saying here? I'm missing out.
I started trading, I traded natural gas. It moved to ES when I started learning ICT, but it was too boring. Drinking the Kool-Aid. Hilarious. I agree, ES is boring to me as well, but usually easier to see setups. Don't forget the VWAP. VWAP. I never understood VWAP. Used to use that one. Nope, I'm really red. No, I'm really red pill on ICT. I'm fully red pill. Yeah, I agree. Same, no indicators, and I don't even look at volume.
Volume has zero to do with it. I was trying to explain it to my wife last night. I was saying if I have an iPhone and I'm offering a price at $100 and people are buying it, they buy it for $100. Some people sell it at $100. The fact that I offered it at that price is what matters, not the number of people buying or selling it. It doesn't matter about volume. It matters about how the price is delivered and the time at which I offer that price. It's all that strategic. That's all it is. Time and price. Nothing to do with volume, buyers and sellers. It just says, hey, look, here's a price. Here's a product I want to sell. Here's a price I want to offer. Who wants to buy it? Who wants to sell it? The number of you don't matter. But the psychology, there's a lot of psychology built into that. Because there's always buyers and sellers. Always.
We used to work with 20 over mathematical models when I worked with a US fund. 20 over mathematical models. I have no idea what that is, Victoria, but it sounds complicated. Happy to have dumped them. Yeah, just time and price, macro. Changing the state of delivery, market structure shifts, versus old highs, lows, SMT. Glad I got it out at 909. I expected this to run down. This could get some legs. I want 830 retested. Choppy, we retested the 838 SIBI. That was my previous entry. Some big wicks, no fair value gaps yet. Got it now. When do charts indices get bearish?
When do they get bearish?
That's kind of a vague question. Like overall, like seasonal tendency, Craig? Like what do you mean by when do they get bearish?
Look, when an old high is taken out, look for a reversal. And once you have a reversal with a market structure shift, changing the state of delivery, and a fair value gap retested, that's when it gets bearish. This is again choppy, so take your money and run, sit on the sidelines, wait.
When they show us their hand that they're bearish.
Yeah, that's typically it, right? And that hand is shown when the market structure shifts and the change in the state of delivery occurs. See, it looks like it just struck perfectly into that 4 hour, but we're just shy of it. So when you're seeing all this bouncing around stuff, you see this nice little bull flag fails. Everybody was looking for this big bull flag to continue going higher. And see how it fails? It runs back to a breaker.
pull your fib tool on your breaker. Now we'll pull two different sides. Stop. We'll pull two different sizes here. We'll pull the wick to wick. We didn't quite get 50%. Pull body of all the candles that make up the breaker. Didn't quite get 50%. So we're just shy of hitting 50% of that whole breaker. And 50% of this little propulsion candle here. See how we just traded just a tad bit below it. Didn't take the lows though. And then reversed. So that's not clean for me. And we never touched the 50. It's almost like we never touched the top of the 4 hour. Didn't quite get a nice clean reversal off of the 50% of that range, of that breaker. And you have to include all of them. I like the last one, again, as my favorite candle out of all of those, but you do have to take all of them into consideration. There's the mean threshold of this candle. Last up close candle, breaker, takes out these lows, these little swing points. That breaker's holding price. So its mean threshold is hit, but this one hasn't been hit yet. So if that reverses down, comes all the way back down, and then finally taps this, you can see why it's super chopped. Not a place for me to participate in anyway. So you got to get out of this range. And something with a nice, clean, distinctive pop. And re-engage this breaker from above. Watch that mean threshold get taken to the upside. And then watch this consolidation get taken. Ideally, you want to see a CAM Model 1 off of here. A CAM Model 2 and a CAM Model 3 would be a retest of 50% of that leg. So I'm looking for a pop up here. Support. Go higher. Oh, Craig wants to go short on indices. Well, Craig, when you start to see that there's upside objectives here that haven't been reached yet, when ES has already made a big run for the high, these guys, you look at that as an SMT divergence, but this may catch up, and that whole SMT thing doesn't exist. So, like Ollie says, now you have to look for key optimum times, like time, like a news release event, or macro times. See how unclean that is? You've traded above that mean threshold, hit right on the rejection block, and then snap and come right back down. So now look for this BISI down here. We've got the rest of the SIBI yet to fill. To here at 818, and that'll get you your 50% of that rate, though 50% of this breaker. So that's not clean for me. Already traded above it and ripped right back through it. But that's why you pay yourself at rejection blocks, my friends. You got to pay yourself. Not that you'd be inside this as a trade, but that's another good example of pay yourself at that rejection block. Otherwise, you don't get the highs you're looking for. This is very frequently done. You see the rejection block hit and not the, it leaves it in there. That's why retail thinks this is a ceiling that's going to get blasted through. So there's a lot of liquidity sitting up here. First presentation, fair value gap, sitting right here at 930. We've retested it a bunch of times. There's a small imbalance right up here. And yes, you have to take those into consideration. Do you look at the seasonalities for long-term trades?
Yes, yes. I haven't developed a mega trade yet, but so many times, like I shouldn't say I don't do a mega trade. I did when I was over here in which one's this one? Banks. Like this Bank of Nova Scotia. I got in April here. When as soon as it broke this high here, I got in right here, right off that high, and I took that. I just got out over here, and look where it's at now. It's gone up another 20%. So as soon as it got it back above there, I could have gone in right there on that candle. I saw the break above this high, and I thought, man, if it comes back and retests that, and it did right there, I thought that's going to go higher. And sure enough, it like it took off, but I didn't get back in there. I thought, well, I've made my 10% plus for the year, getting in off of this level here and getting out. As soon as I saw that reversal below there, I thought, no, I don't like that. Came back, retested it. I'm like, I'm out there. And then all of a sudden it went through, and it's like, oh crap, that could go higher. If it takes the high out and retests it, it's going higher. It took the high out, retested it, and went higher. And that's where, and it really shot up. My buddy Gary stayed in that, so I'm happy for him. But I don't cry over spilled milk. You know, you made some money on the way up. That's the whole. My bank would never have paid me that for the year, and I had that in Laurentian Bank too back here in April, because it's a seasonal tendency. I can't remember where I got in here. I think it was above this premium level. Closed above right here, come back, tapped it, catch along in the bank, and then I got out in, I think I got out over here somewhere. As soon as I saw this level drop in July, no, I think I got out in August. Somewhere in August here I got out. And now it's popped back up above it again. So anyway, I'm not standing there because October, you should see this roll over now and come back down in October. So yeah, I do use, Victoria, I do use a seasonality on some bigger markets. When you want to hold it for, 4 to 6 months, you can catch some, and usually here, March, April into May is usually a great time to catch a quick run up higher. And then May into July, you usually catch a nice little low of the season. And then August, a little pop. And then September, October, those are like key levels that you look for your fair value gaps to form in those months or the weeks, days, and look for those entries for the next turn. Especially if you're looking for a box to box trade in a monthly chart, man, you can stay in this thing for all year if you want. You just got to have faith that your trade's going to pan out. So you say, yeah, it was a nice trade on the banks, but it would be nice if I was still in it. Then I'd say, yeah, it'd be a sweet trade, but whatever. Euro seasonality suggests is bullish for 4 weeks. Let's look at the euro. Where's my euro? How choppy that is now. Oh, gee. I don't have any euro. Let's make this a euro. I'll give you British pound. How's that? Let's go back through the daily. I'm going to show you why the seasonality matters. Here's that March, April. April, and then you go straight up into May. So this is your swing. So you look for the seasonality. It gives you either an opportunity, break an old high, look for this fair value gap on the seasonal BISI. If it breaks that on a close, you want to see it come back and tap that for continuation into May. And if the high gets taken, I don't know why I put that sucker back there way back then. Let me get that out of there. We watch for this high to get taken. It closes right there. So you catch this as a run higher right there. See, old high broken, come back, retest it, go higher. You have a change in direction, come back up inside. You close your trade off. You're on the wrong side of it. Then it goes higher and you go, okay, I'm on the right side of it. So you want to see this level hold. It closes below it. You're on the wrong side of it. Wait for market structure shift. Above here or below here. You get a market structure shift below that. It comes back up inside it. You want to see that mean threshold hold price. It does, it does, it does, and then it doesn't. And you go, okay, I got to see this break the premium level again now. It breaks the premium level, comes back, gives it a little tap, and then finally continues going higher. Now you don't want to see this level get taken on the downside. It doesn't. So you're into June now. All the way up into July, makes the high. Little bump down into a little bump up. That's that bump up into August. August makes a little low. Get a change in direction here. Market structure shift, come back, tap it. Same thing we did on that going up higher. Breaks market structure, comes back in, taps it, runs lower. Looking for a rejection block. Pays yourself a rejection block. That's a daily. Change in direction. Body trades above it. You got to wait for market structure shift here if we can get it. If it does, you want to get 50%, less than 50% of this range to catch the run to the premium box. Runs back up to rejection block. And I think it actually makes a new high there. That's August. Now we're into September, so I expect to see September bump up into here and look for a retest way up here. Oh, yep. I want to see it close above that candle right there. Find support at that, run these highs out, and run back up into this 136.65 for October, and see if we get a run back down. If we come back in October and retest this, look for higher prices for box to box. That's what I'd be looking for. Look at this. Ollie wanted this to come lower, and lower she comes. We're through this level now. You want to see a retest of that level, retest of this level, roll over and come back down now. It's too choppy for me to play in, but I'd like to see that roll over, take out this rest of this breaker now. This is not clean price action. Again, you're coming into the non-farm payrolls, so you should really have your trades off or super low leverage and demand precision. And you can see these wicks are coming back to just to clean up and take you out. Like they're not going to deliver some clean price action right now. So if you get caught in these, maybe you have to look for bigger areas to allow for wicks to come back and do their damage. So this breaker you see right here, taking out this low. You want to see this breaker hold price. Hurry back into that first presentation fair value gap. Wanted it to come lower. So you want to see it get low through here and look for a this mean threshold to get taken at 801. You're looking for an 830 bounce. Oh, this was the D830. And this is a down candle. So the highs have been taken. If we sweep the low and come back into 830, this would be a D's short for continuation on the downside. See how this is not clean? The bodies have dropped below that level. And now they're above that level. So you want to see this tap here and start going higher now. Watch this mean threshold of these two candles get taken. And then look for that last one at 848. Get up on top of that. We're coming back up to that little guy here. And it trades back below it. You can see why these consolidations and wicks are not following the rules that we want. It's not clean enough. Low take. Not quite taken yet. Equal lows now. Yeah, there's lots of 5-minute wicks. Also, there's a ton of these 1-minute wicks. Yeah, that mean threshold just keeps banging around. It's going to hold price back off that last down close candle. Run it out at mean threshold at 797. Oh, there you go. That low's taken now. But 1 or 2 ticks below the low. Now we'll watch to see how it acts. So once the low is taken, you look for a body to get down in here and create a fair value gap that you can run through, tap, and then look for this candle to provide its mean threshold and old high support to come higher. Otherwise, more chop. So like clean price action would be a breakdown, create a fair value gap, run through the fair value gap, come back, tap it, run higher through the mean threshold of this candle, tap it, go higher, come back, tap the top, and then push higher. So it kind of looked like this. Would run down below the low, then it would run back up, creating that fair value gap. It would come back into the fair value gap, run into the mean threshold of this candle, run through it, come back, tap, run higher, come back and tap the top of this breaker, and then continue going higher, like that. That's what you want to see, is this fair value gap forming down here, and then using it as support to hit the mean threshold, to run through it, run it, then tap the top of it, and start heading for that little guy there. So that's kind of like what I'd like to see. Now, how do you read the opposite of that? We want to see a retest of this right here. Once you trade below it, you want to see it get retested. So you draw your little box and you say, this is my little SIBI. I want to see the SIBI right there get broken on the downside right here
breaks on the downside, comes back, taps it, and then goes lower, looking for range extension. You get range extension. And we talked about this a bunch of times this morning. When you see that broken to the downside, come back, find support at it. Before it takes the low, that's what you want to see. Just a tap, run, take the low. Now you want to see this candles. 1, 2, 3. So small little data points in there that happen to overlap with a 1 minute fair value gap. Mean threshold, hold price, and your line in your sand is you don't want to see it get above there, obviously. So you'd be 1 tick above here. And you want to see this keep coming lower. And you want to see it dig into the 830 candle, which is the open of this last down close candle here, which is another breaker. And if its mean threshold gets traded through, so if we just go chunk, 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 chunk into that mean threshold and we close below there, expect your ass to get taken next. 3 arrays in 1 candle. We want to see it close there below here. Then I'd be looking for this to come lower still. There's the tap, the 830. So we've had a trade below the low, come back, retap it right there. The mean threshold of that candle is right there. And you ran a little lower. Hit the next downside objective. To the next downside objective. There's another little fair value gap in here, Sibby. I draw it right there. See that one right there? I don't know who that is. So you draw this little discount Sibby out. That's where it taps right there off that data point. See that? Right there. Tap. You may go, I don't buy that, but it's true, man. Now you want to see this get closed below here and use this as support to take out the mean threshold. We've engineered a bunch. I'd like to see breaker form now. I'd like to see this low get taken out here. And then if you're looking to go higher, like there's a lot of liquidity up there, 11 o'clock, look for an 11 o'clock reversal. So we're hunting for this mean threshold right here right now. Lots of 5-minute wicks. Let it find support around 65. Settle down a bit and then drive back up. Oh yeah, Kevin likes to trade this ES, hey? You're looking for support at 65.10. $65.12 puts you right on the mean threshold. 65.10 gives you the rejection block. If you lose the mean threshold there, look for this wick, take the wick and divide it into quarters. And you want to see 25, you want weakness, you want to see it come down, hit 25% of that or less, and then reject off of that and go higher. But you want to see a fair value gap forming in here. Or you have to wait for a structure break. You have to get above here and here. I want to see this one break market structure to the upside before hunting for this upside liquidity again. And I'd only start hunting this one first. And once you lose that, then hunt for that. So your mean threshold is sitting right there.
And you're sitting right on it right now at 12, 512. How's your oil doing, Craig? Eek. Bad turn, structure shift, tap, lower, market structure shift, come back inside the breaker, go lower. So nothing's supporting higher prices yet. So it looks like it wants to take a run on this 50% of the wick, which is about here at 61.88. I'm just spitballing that, so let's have a look at the 50% is right there, 688. If we can get below that, then we'll take a run on the sell side again. And the mean threshold is gone. Right there. Traded below it. Rejection block is next. So we got this change in direction right here, or the market structure shift here. We use this breaker's mean threshold. This one we wanted to see it go lower. It ran all the way back up into that rejection block again, or sorry, that first presentation. Took the low, used the low. Now take this low and use this candle as support to come lower still. So you're bearish until proven otherwise. So looking inside this range. Where does 50% put you? Right here, 654. And then I'd say 645. 645 on the downside. That would be my level up. 645. I'll put my little line right there. So you're given an entry here. You're given an entry here. So even if you would have taken this one here, or the retest, the perfect retest is right there. But if you're just looking for this low to get taken and then retest it, go lower, rejection block, pay yourself at the wick, 50%, pay yourself at the low, and then I'm hunting down here next. Remember, we wanted all that fancy stuff to happen and go all the way back up here again? Got to stay on the horse, man. Always got to stay on the horse. If it's not coming to fruition and you don't see a fair value gap forming in there, and it's just coming back and rebalancing, and it's not giving you any sign of a reversal, keep watching the opposing side and look for the support levels to fail. And as they fail, there's your discount. Sell side liquidity. Now you want to see a body trade below here. We're through the 50% of that wick. Now you watch a body trade below here. How many of you are all sweating because you didn't catch this trade, or you did catch this trade and you're puffing up your chest, catching a big old peacock move around the house here now. So every time a low is taken and you start to see these fair value caps forming in here, you think, I just want to see an institutional, if I want to see this keep going lower, I want to see an institutional order flow entry drill. I want to see this stay open. Just give me an institutional order flow entry drill and a continuation. So it's a graded response on how this acts here. You do not want to see it getting back through this candle. So you want to see that wick only get hit. Or that's like a D level response now. Your first level is you want to see it just come back in here is open. The next candle, when this one closes in 17 seconds, you want to see the next one just take off. That's A plus. Start running for my 645. An A level would be a return into their institutional order flow entry drill. B would be here. C would be 75%. D would be a full fill and a retap of that. And you don't want to see it start digging into here now. That's a fail for me if we start getting through that. So here's your institutional order flow entry drill, right? Go on, just give it there. Now there's your B level is 50%. C level is 75% of this SIBI here. At D level is a full tap and this old low here. Right there. Now you want to see, that's it. You don't want to see it get any higher than that. You want to see it come down here now. Body's freezing right on it. Wicks do a bit of damage. Keep coming. A D level response is still a pass, man. So now you do not want to see a close above here because now you got that potential for, do we get above this mean threshold and above that candle, find support and start going higher? Is this the turn? We have a return back into the 4-hour volume imbalance right here. We just tapped it. See that? Not quite filled it. But you want to see it keep driving through that. And then for my, mind you, I didn't, I just eyeballed that before. You have to include all of that. 50% puts you at 632. This one's actually down at 632. What was I looking at? An hourly there? $632. I'm going to go to 632. So we still got our support, our D level support. That's precision. Kim, are you still there? Victoria, is your wife still there? Have we sold her on the precision yet? Oh, she's not settling down there. Oh yeah, she's not settling down there. Kevin, you're gonna see her run to at least here. 484. There's the 64, 5, 650, 665. Just want to see a 632. What is the overall? Let me just look in here and I just want to see what the overall 50% of that range is from here. So 655, that's where I originally got the idea from. So I want to see 655 get tapped, and then you want to see if that settles down there. So Kevin, you want to see your 65 or 50%. Yeah, you want to see it slow down right about here at 485. It's just going to retap this breaker here. So you don't want to see 50% of that get taken. You want to see a portion of this stay open. But if not, then it's going to start to eat through that. Look for a run back down into this level here. There's the tap of 655. Let's see if that is on the 1 minute chart. The same. Oops, sorry. Go back to my 1 minute chart there. 655. Yep, I hit it. That was the original number I had up here. Now I'm looking for 50% of this, which should bring us into at 632 somewhere. Here to there. Equilibrium is 653. 653, right on the money. Right on the money. So now 632 is our next level for the 4 hour. If I take from here, include that one. And that one, that puts us at 632. Let's see if we can get into there. She is sold on ICT. Oh, good stuff. Kim is distracted. Messages from family and friends keep her busy. Yeah, that's okay. It's nice to have your wife that supports the same thing that you're doing and studies the charts with you. It's something you can kind of sit down with a coffee together and just kind of look at the charts and kind of bounce some ideas off of each other. I love that idea. That's great having a partner you can do that with. I always trade on double SMT, ES, NQ forming SMT with all-time highs, then SMT with the swing formed in the macro. Nothing is random. Purge and revert lectures by ICT. Change my trading. Purge and revert lectures. I'll have to look that one up. Ollie, if you got a link that's to an ICT purge and revert lecture, just put that in the, if you could put that in the channel there, that would be great. But make sure it's an ICT one and not somebody else. I'm not here to promote somebody else's channel who's ripping off ICT stuff and selling mentorships. Just give it to me straight from ICT. Go to the ICT index if you want and just kind of put the link in from there, because that'll go straight to his material. There's the 63, 632, right on the beezer. Now I want to see if we eat through that and start running for this
Next level down here is the full close at 611. Now, if you would have taken our trade from up here, or at least off of this guy here, or at least off of this guy here, I gave you 3 levels that you can have traded off of here to go short. At 7, even if you took the 797 trade, here's 630. You're 100 and somewhat handles down already. So you're kicking ass, taking names, and I gave you some real good precision there, except for this one here. That ran up a little higher than I was expecting, but didn't break our high, didn't break our swing. If you found it, Russell, could you put the link in the channel? That'd be great. Thanks for letting us know that one, Ollie. Appreciate it. Your help has been instrumental for people in the channel, so thank you so much for your dedication to helping people out as well. I appreciate that, as do the other members, I'm sure. And if you're new to our channel, like and subscribe. We're here every day for you. We're here to help you with your trade setups. We're here to help you with your understanding of price action, minute by minute. And doesn't matter what asset class you're in. Nazir never turned up. I was quite a little disappointed. I was hoping he would turn up. Looking forward to seeing him talk to him about his nifty 50. Thanks, Russell. I'm looking forward to meeting Russell again next month. That'll be 4 of you in total. Starting off with my buddy Lucas out there in Vancouver. The Nabs down in Albuquerque. And now Hadi and, oh no, I've got a Marjit as well. I haven't seen a Marjit for a while. I don't know if he's still in here or not. But I got a chance to meet him as well. So this to be the 5th one. I was like meeting up with you guys, hearing your stories. And then Ollie and I got to meet up. We're going to have go to a pub and have a little beer in England. Seeing if that 632 holds. I don't suspect it will, but I like the fact that it's just reacting off of it. I do love seeing them just come down and tap them and get a nice reaction. So we're waiting for 11 o'clock reversal here now. If you want to run up for that liquidity up top there, all that up there, that candy land, I want to see a nice little sweet reversal coming in here. Nice top. Then down today, eh? Yep. Visit to my doctor today, so won't be around long. Hope you all have a good day. Well, I hope the visit with the doctor is a good one. It's just a simple little checkup. I hope they're not doing anything serious, or if you're just going in for a checkup, that's awesome. They're probably going to say, "There's something strange about you. Why do you always hum?" I see Derek sitting in the office, in the doctor's office, and they're going, "You hum like a little bee, sir." Oh yes, that's just a little influence I've had in my life, and he's just resonating with health, all that healthy honey he's eating. He walks around humming to himself like a little bee. The picture of health, my friend. That's awesome. Thanks, Ollie. Thanks, Russell, for looking that up. I appreciate that. Well, good luck with the physical, Derek. I hope everything's well. And I know you're in the 60s now, so the physical remain is the dreaded physical, the rubber glove physical. That's why it's very important that you, when you're picking your doctor, you shake his hand and get a good bearing on the size of his fingers. All right, so we're testing 632. So I'm looking for this next one out at 611 then. He's going to rip you on your weight. Doctors love to fat shit. It's hard when you're a beekeeper, man. You get around that sugar, that sweet honey. It's a lot of calories, but it's good sugar though. It's healthy sugar for you. Sure beats that refined stuff. I can see us at least coming down to, if we can take this, we've got this first one taken now. If we can close below here on a 4-hour chart, I'd like to see us reverse and get right back down into a discount box here. First one would be here, obviously. So discount 1, discount 2. That would be my objective for a box to box on a 4-hour trade. But don't forget, it can pop through here, trade all the way back up inside here first before rolling over and coming down deeper. So if you still want this to go higher, we want this box here to hold, this BISI. You're losing the love for it, you see. So you got your institutional, well, not institutional order, well, you would have had that level A, B, C, and D. C is, it's at 75% of that fill already. So you want to see it react off of here, which is at 63 level, so or 632 level. You want to see it take off from there. You want to leave a portion of this open. And if it doesn't and it fills it, that's your D. And if that fails, then you're looking for a run back into the breaker and the CIBI below you. And we can retest this obviously in the next 4 hours, but we want to see if this closes below here now. You got another BISI below you here. Then you've got the high, you've got the half the wick and the open of this candle right here, along with the mean threshold. So there's still multiple PDAs to reach for, like data points. So keep your eyes on those.
Oh, you haven't heard from me yet.
Oh, that delicious honey. I should maybe take him a half quart to this. Yeah, you should. You just say, hey, I thought I'd bring in some sweet honey to change that into a sweet demeanor and stop talking about my weight. Looking for 611, and there's 611 right there. 611 is a fill. That one's done. So now I'm looking for right here. I'm looking for 583. What's the low of that candle? 582.5. 582.5. 582.5. That's the next objective. Always looking for the lows at 23.3. Well, that'll put you right in there, Ollie. That'll put you right in 23.316 all the way to 23.402. Have a good week, Ollie. Thanks for all your input this week. It's much appreciated, my friend. Thank you, thank you. Have a safe week. Amarjit, there you are, my friend. I haven't seen you for a while. I hope everything's good. Hi, Darren, I'm here. I was in Leduc last week visiting my sister, now back in Toronto. I'll be back there on in October. You should meet up with Russell and I. Russell and Hadid. We'll have a big party. Amarjit. Well, I'm glad you're still here, man. I'm glad you're still learning. I'm glad you're still plugged away, and I hope your sister's doing well out there in Leduc. Here we go. Here we go. We're going to hit the next level here at 595. See, there's nothing telling me that this wants to go higher yet. What is our ES up to? ES is already through our mean threshold, so we said if it takes that out, we're heading here. So look for, there's our first one. So there's our first objective done. Second objective is down here for ES. And we'll see how NQ, compare the two. See that breaker there with the first objective and the second objective? See how we've ripped all the way through into that already? You go over to NQ and look for this. You'll see, yeah, it's Colin. See how that breaker there and that first one on NQ hasn't even been reached yet? So if NQ follows ES as a run down into its first objective and second objective, it's already reached the first one. Watch it reach through now for the second objective at 463. 463 to 442. That's the next downside objective for box to box. And we're still waiting for it to reach our first one down here. So you can see how if ES is driving it down, then we're still expecting this to reach a lot lower yet. So I want to see us close below here, come back, give us a little wick in here, and continue hunting the rest of these two for the rest of the day, or tomorrow anyway, depending on where we end up. Yes, I will see you. How are you? I'm good, Adi. Thank you. Nice to see you here. I'm glad that Amarjit is still plugging away at this. It's great. He's got some, hearing his story, he's got a fascinating story. He's helping people out at a school. It kind of inspired me to help out those people in Africa and Kenya when we were down there. So, Amarji, there's I think it's $200 a month to pay for a teacher in Africa. So the same kind of principle that you're using in India to help out that school, we're going to do the same thing with this school in Kenya. So, and the fact that you want to help that class structure, I love that idea. I just love it. I hope it's working out for you. You're getting yourself a nice little training plan together. And if you want to help with that, again, I'm more than willing to give you a hand with that, help you out. I'd love to see a class structure shift. If those people that are stuck in those lower classes and break out of that, because I know that's a huge thing over there. I took my son to visit New York and Edmonton. Yeah, those are two different, totally different, conflicting cities. New York, does it still smell like pot? Last time we were there, it just reeked of pot. Like it just oozed out of the streets everywhere we went. All you could smell was pot. Beautiful city, though. There's our next level. Come on down. Looking for the final close there at 547, 548. I'll put that down at 548. 548. Now, we'll see what we get off of the top of these levels right here. We bounce off of those and start going higher. I'd like to see it stop right there, come back, like end the hour there, and then come back and just retest this BISI, and then start pushing lower into this level here. What's ES doing? ES is starting to just about to tag our next discount box here at 5 or 64, 63, 64, 63, 64, 64. We just need one more handle there, and you've got that candle's low is 64, 63. Just come down and give that little tap, and then you got the next box, 64, 63, right here. Hit that, and then you're looking for 64, 43. The half of that consequent encroachment of that is 64, 52. Hit those two objectives and you're good. And your day is done. Take care, Derek. Good luck, buddy. Yes, you can smell at the Times Square. Yes, I figured you could. We were staying at the, what was it, the Balmoral we were at, Carla? Was it the Balmoral? What was the name of that hotel we stayed at in New York? Was it the Balmoral? Oh, Belvedere. The Belvedere. And that's just not too far from the Times Square. So you come out of the Belvedere, walk down the road there, and you can smell that pot everywhere. Come on, just bring it home here to 554. Oh, 554. I don't know why 548. 548 was down here, was it not? The lower that candle. 479. 558. 552. Anyway, you got my point. I'm looking for these equal highs here. See if you can tap them. See what kind of response you get out of that. I'm sure you'll see a little bit of sensitivity there. And if we continue to drive through, then look for the discount boxes. 11 a.m. is coming. If we get the 11 a.m. reversal, look for a reversal back into this candle here. And you just want to see a tap at 614. And then go lower. It's macro time again. Now, if this is really good, it won't even slow down. It'll just keep driving through. If 11 o'clock doesn't give you, I don't see anything giving us 11 o'clock reversal here yet. Or on the macro, you want to see a fair value gap forming in here. In the next 10 minutes or so, you want to see a macro city occurring here. And then you want to see it inside the macro tapping it for a continuation on the upside. If not, then we can see a drive down into lunch hour and you don't see a reversal at 11 o'clock. And I think 9 o'clock will be it for me here in Manitoba. That'll be it for me. And then I'll leave it up to Hadi to take over there in the channel and chat with people. You gotta give everybody the heads up. Ollie's already gone. I don't know if Kevin's still in there. Kevin, are you still in here hunting for a little turn point? There's your discount box. Discount 1, discount 2. Done and dusted. Now you want to see if there's an 11 o'clock reversal. You got to break some structure up here. Get through 64.79 on a close. Use 64.79 as support to go higher. I like this one, then this one, then this one. But no real market structure shift to get above here. Yeah, keep your discipline. I tell you, this is the worst time to catch a, there you go, there's a little change in direction. Get a market structure shift above here now. That's a nice little tappy tap. Now you want to see a body break above this high here. And you can catch yourself a nice little reversal. That came right down to a level that we're looking for. Inside this BISI, we were looking for the top of 548. I like this little retap. We closed above. You've tapped inside it. Now let's see if we can get above here. And then you get through mean threshold here. So there's a swing point and you're really up in a premium already. So that's up to you guys to decide whether you want to take that. I'm not interested right now. There, you're above this one now. But are you above here? Yep, you're above this breaker here now. Now you want to see that, tap it and keep going, head higher.
Again, I'm not touching this one, but that's what I want to see. Keep coming. Eat through the mean threshold. Keep going. Let's get up above here now. And then you want to use, so your first bull trap didn't set off. Next bull trap, you want to see if that doesn't set off. You want to see some structure break here. It's nice time in price macro. So right now I'd be like, ready to break even, pay yourself. That's good. You're above the mean threshold here. Come back, give us a little tap right there. Or not. You can keep going. Rejection block, pay yourself. Adivse, check out the 15-minute chart. I don't see anything in there in the 15-minute chart right now, unless I'm being lazy and there's something over here that I'm not seeing. So you see how it's gone through this, come back, tapped it, and then ate through it again. Don't like that. So now you've got a run above a high. It's busy. You trade through that in the close. We're right back into this one already. Just that candle alone, you want to see that just come back to that mean threshold and just keep pushing higher. That's it. No bodies below that. Let your line in the sand, because now you're between the SIBI wanting to go higher and a BISI that wants to go lower. And you've just come back and retest it. So watch how it acts in here now. If it's aggressive, you want to see it run through here. If you want the continuation on the downside, you want to see this fail. And this small little punch back through this bull trap actually held. The next bull trap's right behind it. Its mean threshold is right there. Look at I pull 50% of this hole. Candle, those two candles. We have to pull body to body. Let me get the body in there. Body right there. And the body right, is that the body right there? There. So the body of that candle, look at that, right on 50% of it. And right back lower, so that held. And now we've traded through this level. Look at that retap, now come lower. I would take a sell there. And as usual, trading view is crap for taking my orders. Well, I'm going to say that it took, had it taken my trade, I'd pay myself one there. So I did hit the button for the short there. Pay yourself here. That's the short from there, range extension. That's the range extension example I've given you several times today. There's the retest. See how they trade below? Retest it and go lower. I better not put my order in now. That's a little disappointing. That's a little disappointing. TradingView does that. That's the several times they've done that to me now. Where you put your buy in there and or your sell in there, and there's a delay. It's not like that my internet feed is not working, otherwise I wouldn't be getting the chart moving. Bastards. Oh well. Anyway, you saw the entry there. I told you about the entry there. There's another entry there. Continuation on the downside. Look for more. Look for this downside. Daily, weekly, daily. They're all below us here now. So the next downside objective is this 6 a.m. candle. Then you're looking for 505. And then you're looking for 494. Then the midpoint. Then the Wednesday's open range area again. Let it sit in there, let it percolate, because you're at a stress-free trade now. If you were caught in the same place I was trying to get in there, as soon as it takes that low, pay yourself, move yourself to break even, retest, continue going lower, look for your first 6 a.m. here. And let's see how this order block's forming in here. I'd want to be just above that. This is just me. You don't have to do this. This breaker is its mean threshold is the line in the sand. I don't want to see this guy get eaten through though. We're coming lower. See how that 11 o'clock failed? Said, no, I'm going lower right here. Saw this nice little pump up. Get inside this internal range liquidity hunt. So if you're in here and you're on the wrong side of it, you're collecting on the way up. Pay yourself in that internal range, whether you use any one of those swing points. As soon as you get to 50%, take half your trade off, pay yourself. I tell you that internal range, take profit model 1 is a great way to save your butt, especially if you're on the wrong side of it. It ends up going on the wrong side of the chart. So the horse changed direction right here. Change in direction. Revisit this inversion. Now we start to break market structure here. And you say, I've got confirmation now that I'm running for the low right here. Look for the low to get taken. Mean threshold first, rejection, low. Then you want to see the retest of the low and the continuation on the downside. That's what you got. Just waiting a few more minutes on this 505 level right here is the top of this. You got your 6 a.m. candle now. That one's done. The next one I want to reach for is this 505 level. Then the old 830 from yesterday at 949. I can get rid of all this now. Well, we've given you some pretty amazing precision today. I hope you guys have enjoyed that. It's been crazy precision. Lots of cool entries. I gave you lots of entries to get on for shorts, for longs. It's been a fun day. Just holding this up off of that 505 level. That 6 a.m. candle. It'll still drop down. I still think it'll come down in there. And what are we looking at for hourly? Oh yeah, we went to that 4 hour, didn't we? So now we're digging through the tops of this. If this is following suit after ES has already made its little dive down into our discount 1, discount 2. Now I'm going to see if it runs down into discount 3. Excuse me. Discount 3 is a full run to 427, 425, somewhere around there. So if we don't get a break above this market structure here, just come back inside this little mitigation, little breaker if it takes out that high there. Retest this level here. We haven't had a retest of it yet. See how we broke below it, but never retested it. So if this comes all the way back up into here and retest this, that would put you at 50% of this leg in here. Just about 50%, so you're looking at 62%. Puts you right back inside there for institutional order flow. Entry drill, roll over and come back down lower. You don't want to see a body start getting above here. You can get a wick into that. You don't want to see a body get up here, because then you're between this wanting to go higher and that bouncing off there to go lower. For ES, they're deny SR 50 or 505 Hidi. It'll get there. Noah, thank you. Very good teachings. You're very welcome. You're very, very welcome. Yeah, I totally believe it's going to get there, Hidi.
My stomach's just growling like crazy. My wife left to go somewhere, so. There's so many little arrays inside here for it to reach for. Mark's 3 a.m. candle is sitting right in the middle of that. If we go back to Mark's 3 a.m. candle this morning, where's 3 a.m.? Let's put it on the 1 hour chart here. This is the 3 a.m. candle right there. Now, if we did a little research here, let's do a little research because my wife has left. My father-in-law's left, so I get the place to myself right now. This is the 3 a.m. candle here. It's a swing point on a TIBS as well. So that 3 a.m. candle, we're looking right here in the 10 o'clock candle. I'm looking for 50% of this. I'm going to put this right here. All right. So what we're going to look for is right here to see a close on the 15-minute chart. We're going to look for a close below the consequent encroachment of that. Now, I think he uses the whole candle. So I'm going to go back into the 10 o'clock candle here now and see on a 15-minute chart whether or not I can find close below, come back, retest that for a short from 3 a.m. candle to 3 a.m. candle down here. Right here. And that would be right where we just tapped right there. There's your 505 level hoodie. Nice. So that's a 3M. So I'm just gonna use Marky Mark 3. And this would have been, I'm sure he's just chuckling to himself and just say, I don't know how many times I told you guys about my 3 to 3 a.m. trade setup. So I'm gonna go in here and see if we see a perfect trade setup. I don't know, I haven't seen it yet. We're just gonna go look for it to see if you get out right there from the midpoint of this 3 a.m. candle, close below, come back into it, and then hunt lower. Okay, that's what we're looking for. And now I'm going to put my big chart out here. And we want to see a close below. And we're going to see if Mark's right here. We closed below the 15-minute. Look at that. We closed below it. We came back in, tapped it, and Mark went short right there. That was his setup. We talked about it just before it happened. And then right, or not before it happened. We did that before we came looking at the chart. So I wasn't cheating. I had no idea this setup actually occurred. That's based on what my understanding is of his 3 a.m. to 3 a.m. candle. He was saying on a 15-minute chart, if it trades below the consequent encroachment or the mean threshold of the 3-hour candle and retests it, you're going to go short. And look at that. Close below it. We're on a 15-minute chart. Close below it. It came back, retested it. He would have been short at 760, and his 763 was all he was underwater, and he's getting out right there at 505. Oh, Mark, where are you? Why aren't you in there chuckling away? What a beautiful trade. Wow. Mark's like, I told you, you guys should listen to me. What do you guys think of that? There's only 16 of you in here to witness that one, or anybody who's watching this video late. That's a nugget. That is a super nugget of information at 2 hours and such into the video. I just gave you Marky Mark's Mark III trade. You marked all those 3M candles. Did you catch the reversal at 760? That was a boomer. A boomer. Look at that. That's right to his Marky Mark III. 505. And now bounce off. And he's just moving back. That's 760. Was that on the 15-minute chart? Right there. 760 to 505. That's 255 handles in that trade. 255 handles. Yes, Vittorio, tell your wife that. Say, Kim, they just showed us a new one. It's the Marky Mark Mark III trade. I'm just going to advertise him as Marky Mark and the Funky Bunch. Marky Mark and the Mark III trade. Mark off your 3-minute or 3-hour candles. 15-minute chart. Wait for the break in market structure to the downside. If you're through the market structure for him is the consequent encroachment of that candle. As soon as it breaks that on the downside and trades back into it, if you're short, you go short from there. And then he runs from the next 3M candle. And that would have been right there, 255 handles. That's a 5-digit return if you've got 2 or 3 handles or 2 or 3 contracts on that. That would have been a huge payday. So what we're looking for now is, now that 505's been hit, 1130, I'd like to see this market structure shift up here. We can get above this level right there. There's your first rejection level. This is the what I call the go, no go zone for a premium, or reject off that and come back lower. That's a go, no go line. And then you got your premium above you, and it happens to be up at the premium level of the range anyway. Now I want to see if this level gives way. So if we take this to the upside, find some support at that, some support, get through the mean threshold, get on top of this. Now we have a market structure shift. Now you can get back in sync with going higher at 11 o'clock, 11:30, 12 o'clock. 12 o'clock may take one more run on this low, just so you're aware, and come back and tap that that daily still. So until you have market structure shift, I wouldn't touch this. And I'm sure Hadi's thinking the same thing. Go, no go zone is holding. And see how this high's been taken, and we got to change in direction. We're changing the direction up again. We're coming back inside this range here now. So you want to see it come back and tap 576 or 574, 575, somewhere around there. That's right on a 19 candle. So you want to see it tap that level, roll over, and come back down now into this range here. If it closes above that level at 582, then we want to get back above the go no go zone and then run higher. What you posted in there, Hadi? You use the higher time frame, say 15 minute. There's nothing wrong with that. Indeed, it is. The fact that we're even running through this again tells me we want to get into the zone. Look into this one here. Wait for that zone to give way. Wait for market structure shift first up. That could be just the bear trap or bull trap you're looking for. You don't want to give back your profits if that's going to trip you up and take your foot off. See how that no-go zone just kind of holds price for a second or two? Now for me, it has to get back through this level and take out this low to get back in lower. Otherwise, this is support to go higher. Same thing. Same thing, Hadi. You're looking for this five minute candle to get taken to on the upside. It's the same as this right here. This is the 5 minute candle. So we're looking for a structure break above here. And then use this candle, its mean threshold, or at least this fair value yet. Because this candle makes up the top of the BISI, you have to use all three. 1, 2, 3, 4. 4 different levels to go higher. So far, so good. Consolidation, CAN model 1, tap the high, keep coming. You have a CAN model right here. Russell, this is where you start to mark up your charts. Like I gave you my trade notes over the last few days. Same thing right here. That's your CAN model 1. You enter it in here, mark off these levels and say go no go zone, where it's got to come back up into this and reject off of that, come lower. It did. It just came back into this range to this level, hit that, and then now we want to see this level give way. We're revisiting it multiple times here. What is beeping out there? Oh, it's just dishwasher's finally done. Okay, and then we finally eat through it right here on a close. So you say there's the premium box. That's the go no go zone. It finally went to the premium box. Come back. You can tap it now. Right on bar. And then we want to see it climb up on top of this. This is no different than a daily chart, weekly chart, monthly chart. It's all fractal, man. All fractal. Where's Nazir? We need Nazir to come back here. I want to help that guy out. Oops. I want Nazir to understand his nifty 50. There's the premium box, done and dusted. Now I want to see if we can get above that. So don't jump to your PD arrays, just keep your eyeballs on them. Your 5 minute, its mean threshold is now taken. Good sign. Get up on top of here. Oh, I got 5% battery in my iPad there. Now, usually what you want to see is if you see a market structure shift above here, wait for a fair value gap to form and then trade into that fair value gap to go higher. No different than when it takes a run lower. We've got to see a body break above here though. There's a retest of the go no go zone. Not quite retest. We want to half a handle away from it. And again, this changes up if we get through this breaker here. Takes out this high. Some may just consider it propulsion blocks, just to propel price higher into the premium. So no body above here yet. Back to this candles open, into the go no go zone. If we get through that again and come back underneath it, it now becomes support to come lower. Excellent. No bodies below here yet. Just a wick back into the no-go zone. Get up there. Get through the mean threshold here and get on top of that candle here. Then we're back into a long. And pull your fib tool from high to low. Internal range liquidity hunt. And remember, it's non-farm payroll week. Still no body above here yet. So we're stuck inside there. Wick's doing a bit of damage. Did return to our level we're looking for. Get a close above here. You got 7 seconds to stay above that level. You're on it. Now you could buy that there to go long. Look for range extension now. So rejection block, hold high. Mean threshold's done. There's the rejection block. Pay yourself there. So you got in there, pay yourself there. Stop loss break even, though I think it's still going to come back here one more time. It takes the high, pay yourself again. And now we're waiting for a nice little BISI to occur in here. So there's the rejection block. Let's see if this high gets taken now. Good for you, Russell. Now, do you have the conviction to stick to that, or are you going to sneak another trade in? Is greed going to overcome and your confidence going to overcome you, and you're going to take another trade. At the end of the day, you'll go, oh, that looks like a great trade. I could take one more. I can afford to sacrifice some of my profits. Then you start to justify taking another trade. You start saying, well, I've got 3 solid trades, man. 3 out of 4 is pretty good. I could afford to lose one if I just keep my stop loss just tight enough. If I just put my risk really low, I'm okay if I lose a little bit. Then you start to justify it, taking another trade. It's the psychology, the stuff that goes through your head. I could do that. It's no big deal. If I made $300, I can afford to throw away 50. I'll just do $50 in there. 250 is still a good amount of money, right? That's that gambler's mentality. That's trying to just validate inside your own head for taking another trade you said you wouldn't. No body above here yet. You pay yourself at the rejection block. Actually, I did take the highs. So pay yourself at the high. Now I want to see it come back, find support in here, or just tap on this here one more time. As soon as you take a high, I wanted to see the fair value gap occur above it, not below it. I'm through the mean threshold here. I have not traded a body above here yet. Follow the rules. The rules are there for a reason. And if they're not your rules, they should be, because they're good rules. If this rolls over here now, you'll go, oh, now I know why they have those rules. They're there for a reason. Are you hovering with your finger over the button, ID? You getting ready for your trade? See, now we've got this change in direction, and now we're eating through this level. I like that retap. You do not want to see it get below that here now. I'm going to put one buy in here. Come on. And my stop loss will go just below this low. I don't want to see this get violated now. The high's already been taken. We've got a change in direction. I want to see it pop back through here. And I can argue both sides of this amount. I can argue both sides of that. I want to see it get back through this level. I don't care that it's going up higher right now. I just want to make sure it gets above here. That's the retest. I was taking it as a retest, but you see the reverse right here. So wait for it to get above here and here now. Confirmation is here. That helps to confirm that, yes, it wants to go higher, and taking out that breaker there on a close will also give you the 5-minute reversal as well. Oh yeah, I see it right here. I see that's the one you want to see. I agree with you 100%, Hadi. You want to see this body get above here and a nice little punch through here and come back down and tap it. Not just a little piece of body, you want to see a nice little punch through that. So
You got this, these equal highs. They're all sitting there waiting for validation. But also keep in mind that 12 o'clock it may take one more run on these lows just to get you down into this daily fair value gap again, this inversion down here. And we could at least see a run down into this right here. See how we've traded above this reversal on the 15-minute chart? If we run back down into 592 all the way to 577, that'll put you right back in here. So now this candle's been retested, and now this candle's being eaten through. That's what we're looking for. And we want a nice little body to close above here. 3 seconds. All right, it's go time. Put one in there. We're going to layer this in. Highs are taken. I'm just going to move my stop loss to break even right now. My iPad just died, so I have to see you guys on my cell phone here. That's out. Let's see if we can get a retest of this old or this high here. And on the 5-minute chart, you're still waiting for this to close above here. And you got 15 seconds now. There, here now closed above it. Just come back and give it a little test right there. This candle's open. You catch up for a long. I just want to see that continue to leave from here. And I'm looking for that first 50. 62. I'm just going to do a take profit model 1 inside here. We may run all the way back up and clear out this liquidity here. And finally take a surge on that those old highs there. I'm just going to get my power cord here. I hope you guys have been enjoying this show today. I hope you've been able to catch some trades. We've given you downside and upside trades, internal range liquidity and external range liquidity. It's giving you a lot of awesome trades here this morning. So I hope you guys have been able to catch some of those, at least catch the logic behind it. Can anyone build me a bot? I have the logic. Yes, I could build bots. So now I'm going to just put this one in break even plus the cost of the trade. Let it run now. Let's see if I can get some 50% on that. I've only got 1 on there. So I'm going to use the reverse philosophy in this one. I'm going to, as soon as it gets to 50%, I would go to break even, but I'm just going to kind of watch to see where I'm sitting in terms of my sorry. My computer's not enough to charge my iPad there. Did you catch this run up, Hadi? Did you manage to jump in on that as well? See that change in direction right there? I'll close that out. Change in direction. Start eating through all this already. Look for a retest of this level again. I'm gonna start that trade all over again. We'll buffer that trade. Now, see, now you're below this market structure shift here. So we'll see if that 25 seconds, if this holds. Watch that 14 seconds. If it closes below here and you got to change in direction, I'm not so much a downtown trader right now. So be careful of that today. Remember I told you you could still have a run on this at lunchtime? And you've got to change in direction right there. This candle has to hold for you if you want to still go higher. There's the retest. So now I've got a conflict as one wants to go lower and you have a structure shift. And you have this breaker right here. The first candle, if you lose the mean threshold of that candle again, we're definitely coming down for a run in here. See how that retest? Got to stay on the horse. Don't be running in this one for a long now, Hadi. Bus is going uptown. So in order for this bus to go uptown still, you got to get through that little breaker right there, and you got to get through this little sibby or bissy right here for that to continue going higher. Now we've got a structure shift. We've got a retest of the low. We're going lower. Now you want to see this little breaker right here give way to the downside. We're already through the mean threshold of that candle. Your line in the sand is right there. The bottom of that, well, I guess you'd have to take the whole thing. You would just have to sit down here, but who wants that? So now you've got a swing low. You got a sibby right here. It's going to trade through the sibby and that busy, get up on top of it, and continue going higher. You're out now. Okay, gotcha. I'd like to see that roll over here, come back and retest this 15-minute. If you retest the 15-minute, that'll still keep you inside here. If you're retesting this, you got to be one tick below the low, which will actually put you right back into this 15-minute sibby. But once you see it starting to break through that, you just say, okay, now we're probably getting a run back down into this 15-minute fair value gap here. You want to see this hold now. So what you're looking for here now is a return into this 15-minute fair value gap and the 1 minute to catch a reversal. You want to see it changing direction in the 1 minute or the 15-second chart after reaching into here to look for that opportunity to see that go higher. And that may be right at 12 o'clock. So you'd expect to see this coming, roll into here, 12 o'clock, make this little swing point and start pushing higher. That's a nice big retest of this 5 minute. I've got so many overlapping points of view now. This one, I want to see it come here to validate to go higher. This one here is already validated to go higher. And this one's already validated to come lower from here. If it gets back through there, 1 minute is in sync with 5 minute. 5 minute is not in sync with this because it hasn't come back and retapped it. It's just going to keep marching. Green, 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 green candles. But you'll see it. It's first seen here. Next thing I want to see this 1 minute follow suit. Keep coming higher. Got to get through here. Get back in sync. Tap and continue going higher. Then that validates this for me. But I'm still wary of the 12 o'clock. Back inside the breaker, retest. I think that's going to be it for me, you guys. Hopefully I got enough battery left in here now. 2%. Get back in here. Closed up on me again. Anyway, I'm trying to say goodbye to you guys there on the Telegram or the YouTube video. There we are. I'm done for the day now. Thank you, Darren, for everything. You're very welcome. It was an amazing session for me. Almost wait 4 hours to take one trade. No need to close below 11:30 on a 5 a.m. candle. All right. Well, I'm glad you did well, Hadi. Congratulations. Congratulations to everybody else who did caught some nice trades today. Hopefully you got to learn something. Hopefully you got to apply some of the skills you're learning from ICT's principles. And I will see you guys tomorrow for Crazy Freaky Friday NFP. Not for professionals, remember that. And I'll still be on there kind of watching here and there for the afternoon. If we see something in here, which is unlikely, don't get yourself too hot to trade NFP. There's lots of opportunities coming up. We're just starting to get back to September, the last quarter of the year, so don't rush. You're very welcome, Vittorio. I will see you guys tomorrow morning. Thanks for tuning in. And as usual, I'm sending the love, my friends. Sending the love. Take care of each other out there. Be kind to one another. And I will see you guys tomorrow morning, bright and early. Take care.